Hello, thanks for watching Kalkine TV. I'm Sage and we have the ASX buzzing stocks for the day for you. The S&P ASX 200 jumped 0.5% or 35.4 points to reach 7,216.2 in the opening minutes of trade, buoyed by the financials and technology sectors. CSL edged 0.1% lower to $297.86 after appointing Paul McKenzie as the chief executive from March 6th. Bendigo and Adelaide Bank jumped 6% to reach $9.58 after reporting that cash earnings climbed 22% to reach $245 million for the 5 months to November 30th. G8 Education firmed 1.5% to $1.01 after reporting operating earnings before interest and tax of $71 million year to date. And the Star Entertainment Group was flat at $2.58 after ASIC started civil penalty proceedings in the federal court against 11 current and former directors and officers for alleged breaches of their duties. Let's now take a look at the announcements in detail. The Australian Securities Regulator on Tuesday started civil proceedings against 11 current and former directors of casino operator Star Entertainment Group for alleged shortcomings related to the risk of money laundering. Casino operators in Australia have been dogged by damning reports of shirking anti-money laundering rules, dysfunctional governance and poor corporate culture, prompting authorities to seek stringent disciplinary actions. The Australian Securities and Investments Commission on Tuesday alleged that Star Entertainment's board and executives failed to give sufficient focus to the risk of money laundering and criminal associations. The lawsuit includes claims against Star Entertainment's board members between 2017 and 2019 and involves the company's former managing director and chief executive, as well as a former chairperson. Last week, the Queensland government slapped penalties totalling $100 million Australian dollars on the company and deferred the suspension of its casino licences for a year to monitor operations in the state. Bendigo and Adelaide Bank provided an update on its first 5 months of trading and outlook for the remainder of financial year 2023. The bank expects further interest rate rises in the 2023 financial year, taking the cash rate between 3.5% and 4% and net interest margin tailwinds to continue into the second half. Operating expenses will increase modestly on 2021's to 22 levels due to non-lending losses and a higher mix of investment spend being expensed, the bank said. Unaudited cash earnings were $245 million, up 22% for the 5 months to November 30th. Loans decreased 0.7% over that period, and net interest margin post-revenue share arrangements was 1.85%, with an exit net interest margin post-revenue share arrangement of 2.01%. Year-to-date net interest margin pre-revenue share arrangements was 2.3%. And residential arrears exceeding 90 days for the month of November was 41 basis points, down 8 basis points versus June 30th, 2022. And CSL today announced that it has appointed Dr Paul McKenzie as Chief Executive Officer and Managing Director of CSL from the 6th of March 2023. Dr McKenzie will succeed Mr Paul Perreault, who was advised the board of his intention to retire after serving 10 years in the role and more than 25 years with the company. And Dr McKenzie has been appointed following a thorough process conducted by the board, currently serving as CSL's Chief Operating Officer. Dr McKenzie will immediately join the Board of Directors as an Executive Director and will become CEO and Managing Director on 6th March 2023. Mr Perreault will step down as a CEO and from the CSL Board of Directors come the 6th of March 2023, and he will remain with the company as a strategic advisor to assist in an orderly transition until he retires later in the year on the 6th of September 2023. Before we look at some of the other important news, let's take a short break.
Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
Welcome back. Hope you're enjoying your day so far. You are watching Kalkine TV and we are going through the ASX buzzing stocks for the day for you. Let's now take a look at some of the other important news. Australia's stock market is pulling in a growing slice of global investors' funds as the prospect of big dividends, relatively defensive performance and exposure to China's reopening attracts cash despite a looming domestic slowdown. Australia's $2.3 trillion bank and miner-dominated S&P ASX 200 index AXJO has the highest dividend to stock price ratio among the major markets and has outperformed nearly all its developed market peers this year. Flows suggest that investors are betting on the run extending and that their views on what has been regarded as a rather boring low-growth Asia-Pacific corner are shifting as the allure of its healthcare, energy and resources sectors brightens. Before the pandemic, many investors had been happy to talk about Australia as a good defensive market that offered strong commodities exposure, said Morgan Stanley equities strategist Chris Nickel. And Morgan Stanley reckons the ASX 200 can gain about 7% in 2023 and prefers energy, healthcare and diversified miners over banks and other companies exposed to consumption or housing. And this year is set to be the third in a row to show net foreign inflows into Australia, with more than $5.2 billion entering in a 10 months to October time span, according to Lipper Equity Fund Flows figures. Separate data from analytics firm EPFR shows allocation to Australia within global ex-US funds is rising and has hit a near 6-year high of almost 15% for Asia-Pacific funds, roughly approaching market weight. And Australia's weighting in the widely tracked MSCI Asia ex-Japan index is 17% this year, up from about 16% at the end of 2019. Thanks so much for your company on that report. Hope the day in trading goes well, and please do keep it locked on Kalkine TV. We'll have another ASX buzzing stocks for the day for you coming your way shortly. Until then, Sage signing off.